Hey, what's up, guys? Um, just a second. All right, give me a second, guys. All right, give me 1 second. I'll be right back. All right. Hey guys. Let's see. I'll just start recording. All right. Good morning, guys. Today is Tuesday, August 22nd. As usual, we'll be doing analysis for US 30, gold, and EU. So, and I think you're in here. So let me go over. So Invest, I'll just call you Invest. I forgot what your name is. Right. So you had a question in here in the Discord regarding the trades for yesterday, right? So yesterday, everything, right? Same thing as today. So I always use the way I use my daily bias, and this is just for me, because if you ask me, if you talk about a daily bias, right? If you're using it like I do, I use the daily SAR. I put the instrument I'm trading on the daily time frame, and I do not extend the lines. So that's how I get my daily bias. And then for me to then follow the daily bias, I would have to check, right? So for example, here you can see daily bias on US 30 for me is bearish because what is the last daily closure of an SAR level? So it was a sell closure below, it was a sell SAR. So I am bearish on US 30 until US 30 creates a buy or a bullish SAR level and closes above it. So a good example here is gold. So you can see if you ask me right now, what's my daily bias on gold? I'll tell you, I'll just come in here. I would look for the last daily closure above or below an SAR level. So in this instance, the last daily closure was bearish. So for me, this whole time, I have been selling gold. I've been selling US 30, same thing as you. But with this one, I do not take trades when that confirmation gets in, because as much as gold closed below here, you can see this retracement. So for me, the first thing on the daily, I don't look for entries on the daily. I just look for what is the market telling me. Should I look for buys? Should I look for sells? Now, here's something has happened on gold. Gold now is telling us, has given us a bullish SAR, so a green sell area on the daily. Now, what gold is telling us that, hey, for you to change your daily bias to bullish, you need a daily candle to close above 1904.041. But until then, you are still bearish. And keep in mind, this is another thing I mentioned to you guys last. So SAR stands for stop and reverse. So I did mention to you guys that if like you're in a sell trend like this, or if you've been looking for sells and you see the opposite being formed, like for example here, this was a good area to sell gold, 1904.041. Because keep in mind, the only purpose for this one as of right now is telling us, it's just a message. So keep in mind, it's just a message. It's telling us the daily bias has not changed to bullish. But if gold closes above me here on the daily, your daily bias will change to bullish. But in the meantime, you could have used this zone to sell gold. So keep in mind, SAR is stop and reversal. Now, same thing as EU here. You see what happened with EU? So if I replay this chart right here with EU, let me go back a little more right here. And keep in mind, these SAR levels are generated live. They're not from past, right? If you do not if you extend them, like if you go to any of our indicators and extend, like you'll see in shorter time frames, you can extend this. The max you can extend is by 500 candles, and you'll see you'll get a lot of historical SARs. But for me, on the daily time frame, I only use the live one, the most recent one, the current one. So for example, let's look at EU right here. So this whole time for EU, since this daily had closed above here, I would have only been looking for buys this whole time. Even during this downtrend, I would have still been looking for buys. Now, if we go, we'll see the candle. This is the candle that formed the sell SAR. However, still during this day, right before this candle closed, I would have still been looking for buys until, right, you want this candle to close for you to change your bias. Now, when this daily candle closed on EU, it would have told me, okay, you're done looking for buys. Now, because I gave you the confirmation for the daily closing below that, now your only job is to look for sells. Now, not to say I'll go over, you can still look for buys, but I'll go over that. I don't want to mix them up for now. But right now, EU is telling us your job right now is only to look for sells. And I'll go over how then I proceed to another time frame to look for those sells or look for those buys. Now, right? And keep in mind, stop and reversal. So you see this whole time, I would have just been looking for sells and keep, right? Just note that down. I would have been looking for sells, and I'll show you how to look for sells and how to, sells or buys depending on your bias. So this whole time, I would have just been looking for sells on EU. And then I want you to see what happened here. You see what happened? EU told us, same thing gold is telling us right now. Hey, you are still bearish, but I've given you a level such that if I close above this on the daily time frame, your bias should now shift from sells to buys. But you see here, EU did not give us a closure above that SAR. So keep in mind, this again would have been a nice level to enter another sell on EU. Now keep in mind, sometimes you can get burnt trying to catch this, but like I think I've shown you guys an example in the past. But you can get away with catching a sell at this green entry, because keep in mind SAR, stop and reversal. But the point is, your bias here would still be bearish. The worst thing that could have happened here, if you're catching a sell, is if this daily candle right here, shot up, like maybe some news event happened and it shot up so far up and stopped you out. Now here again, still would have been looking for sells. And you see what happened here? EU is telling you what? EU is telling you, okay, I'm about to give you another sell confirmation. Just hang on. You wait for this daily candle to close. Then your daily, right? Your daily bias continues to be a sell. And you can see this whole time you would have still been looking for sells on EU. Same thing as US30 here. Had given you a sell confirmation, right? Did some slight retracement, gave you a possible area where if the daily closed above, you'd have been looking for buys, but it faked out, reversed from that point, and then gave you another sell SAR region right here, close below, and you can see how US30 dropped after that. Now, are we together until that point, how you analyze the daily bias or how you look for the daily bias?
Okay, bro, there's two things that I need to ask. When you said the news, the heavy news, and when you said what's it called? When you said the other day about when you there's a certain time that you don't trade. Is it
Yes.
3 p.m. Is it, what was it again? 3 p.m.
Yes.
Eastern Standard Time.
Yeah, 3 p.m. to 11 p.m. Eastern Standard Time.
Yeah. So during that time, like on Mondays, like is it Monday? When you said when they say manipulation Monday, but like sometimes on Monday sometimes the manipulation won't happen. It might happen. It might happen on Tuesday, London, right? Yeah. So in that sense, like the manipulation won't happen on Monday. It might happen on Tuesday, London, and then you might have to look for the trades from Tuesday, London. So in terms of thing time, I think it would be so UK is 11 a.m. So I think in America, I don't know what time that would be, but yeah.
I mean, right now it's like 10 a.m. EST.
10 a.m. Yeah. So today, 10 a.m. Yeah. So 11. Yeah. So around 11:30 to 12. So that for you guys would be, I think that's like what, 7 for you guys?
Because what, you're in the UK now?
Yeah.
What time is it now?
It's like 2:50, nearly 2:50.
Okay, so you guys are like 5 hours ahead. 5 hours ahead, right? So UK time, it would be 8 p.m. to 4 a.m.
Yeah, that's it. Yeah, you're right. Yeah. So what was it again you were saying about the so if the manipulation doesn't happen on Monday, it will happen into Tuesday, London, right?
No, so keep in mind here, right? So we're not talking about manipulation. We're talking about the daily bias. So do you understand the daily bias, how to work with the daily bias, like based off of how I've gone over?
Yeah, yeah.
Okay. All right. So I'll get to the manipulation part. So keep in mind, we are not trading manipulation or anything, right? Those hours I give you guys not to trade is just because price is either likely to be manipulated or reversed during that time, but I'll go over that. Now, if everybody's okay with how to use the daily bias now, see right now on US 30, or all of this US 30, gold and EU, I am bearish based off of the last daily closure of an SAR level has been bearish. Okay, so now how do I go about then? I go now to, I have another chart. I have 3 charts, US 30, gold, and EU. And then what I'll do, my entries are on the 4-hour and 1-hour. So on the, I start on the high, right on the 4-hour time frames on all of them. So keep in mind, like right now, I am bearish on all these assets. So this is a good test. So 4-hour right here. Now, on this, on the 4-hour and 1-hour, I will extend my lines because I want to see historical, because on the 4-hour and 1-hour, I am looking for at least a double SAR and above. So I'm not trading a single SAR like I was on the daily. On the 4-hour, 1-hour, and we'll go to the other lower time frames because it's just systematic. So I'm bearish on all these instruments. So I'll come in here. I'll come to the 4-hour. Keep in mind, I am bearish. So what I've done personally, I've turned off the green lines up here. I'll go over how to take the buys, right? Or how to counter trend the daily. So for me, I'm not interested in the buys. So I'll take off the green line. So this is why you'll see here on these instruments, you can only see the red lines. So I hope we're okay until then. Now, what I'll do, I'll then highlight, I'll box in the double lines and above. So the double SARs and so on and so forth. And keep in mind, I want those lines to be close to each other. So for example, here for US 30, these lines are like 20 pips away from each other. That's fine. This one right here, 137. So this one about 30 pips, a bit too wide. So you want double SARs should be like within 20 to 25 pips of each other. So I'll go ahead and box that in. I'll do that on the 4-hour. So you can see here on the 4-hour, you can see I've boxed this in. Okay, I go down on the 1-hour. Same thing. I've boxed this in. So what this is telling, I'm telling myself that, okay, if I'm looking for sales here, I would want this 1-hour candle. Keep in mind, my entries are always 2 candle closures. So for sales, I would want this 1-hour candle right here to close below here. I would want the next candle. It doesn't have to, keep in mind, I stopped using the word retest because not every entry candle will give you the retest. But also I want the second candle to close below here, preferably not too far down. Now, right, because keep in mind, nowadays, for me, I'm doing like at most a 50 because nowadays I'm only trading SAR. So keep in mind, don't try to mix the SAR strategy with anything else until you understand it by itself. So you won't hear me. I mean, I still know how to trade the breakout, the crosses, but nowadays that's how I've even turned off all the others. I've even turned off the markups and the zones indicator. So I'm not mixing the SAR with anything. So here for me, what I've told myself is that if 2 candles close below this sell SAR zone, double sell SAR on the hourly, I will sell US 30. Now, if the entry candle closes right close to the double SAR such that, so keep in mind right here, your stop loss should either be above the SAR zones you're trading or above the previous high of the candle. So ideally for me, I like them being above the SAR zones. But if it's US 30, I just put like a 500 pip stop loss and 1,000 pip or 50 pip stop loss, 100 pip TP. Now, think about this. If the second candle closes here, like exactly here, that will give me, right? I can afford to hop in on impulse. But if the second candle closes down here, I would have broken my rules for the stop loss because my stop loss won't be above the SAR zone that I'm trading. But for me to have the stop loss above the SAR zone I'm trading, I would have to extend it to something like that. And look at that. My stop loss jumps to above to about 110 pips. So for me to achieve a 1:2 for such a trade, I would have to go for 220 pips TP. Now for me, I'm not willing to do this on an SAR. So which is why you guys see me waiting for entries close to the SAR. So if a trade happens down here, that, you know, there are a couple of things you can do. If the trade validates here and your stop loss cannot be below this, above the SAR. So for example, in this cell, you can do one of two things. You can enter first with a, so if you're risking 0.5%, you risk 0.25%, and then you save your other 0.25% for any retracement up. So keep in mind, not every, and we saw this last week during the live session when we identified a US 30 sell entry, but it was so far down in TP, but would have gone even actually further to, I'm sorry, so far down to your entry. And even if you entered it on impulse, it would have gone straight to your TP. But you'll have other times, and we've also experienced this, where you have those two candle closures and you get the retracement back up. Now, most of the times that retracement back up now comes those quote unquote manipulation hours during 3 p.m. and 11 p.m. Eastern Standard Time. So let's assume that we have the next hourly candle closing like this. So let's assume like this bottom, what is that line? My bad, not that. It should be, let me try this.
Can I ask you a quick question? It's about something I'm seeing on US 30. You are waiting for a sell. Huh?
Yes.
I saw that they are right now. Tell me what you think about it. They are like I think it's ready in 30 minutes. But me, I'm using we are not using the same broker. I'm using Pepperstone. So on 30 minutes Pepperstone, they are like like two double SR closing in 30 minutes, and it's already retested and it's closing like in 10 seconds.
Okay. So if you are to enter this, so similar to even what I was explaining in the hourly. So here, these are the double ones you're talking about here. And actually these are, yeah, so this would be a sell. So your stop loss would be above here. Yeah, so that would be a sell. Now, keep in mind, it's actually two double, right? So there's this double right here. And then there's this double right here.
Yeah.
Okay, yeah, so depending on which ones you're trading, so I'm guessing you're trading this one's up here. So
yeah,
for this one, for this one's up here, and keep in mind, so this, so think of this as me explaining this one on the hourly as well. So you can see for this one, for this sell right here, your stop should be above this two double SARs right there, if you're trading it, either that or the previous high of the previous candle. Now, if we were to put it here, our stop loss is 64 pips, right? Now, for me, if I want to trade this trade with 500 pips, I can do one of two things. Now you can see here, I can easily get taken out, stopped out, and price to go back in. So if I'm taking this trade, and I'll test this out. So I'll enter this, but I'll enter personally how I would enter this trade is using a 0.25% risk for the first trade. So let me do that real quick. And keep it, again, this is on the 30. I don't trade on the 30, but it's similar to the idea on the hourly. So this one, I'll enter a sell. So for me, I want it to be 500 pips. 500 pips. Actually, if I'm doing 0.25, I can survive doing 1,000 pips stop loss. Let me see how I do that. Actually, no. So 500. Let me not introduce that for now. Okay, so I'm selling US 30 right now, based off of, my stop loss is, in this trade manager, it has to be in the thousands, 10, 1, 2, 3. Okay, so I'm selling US, okay, I'm in the trade now. So I'm currently risking 0.25%. Now, let me tell you why I did it. So I'm trading in the direction of bias. So I'm trading this like it was in the hourly. The reason I'm trading in the direction of bias. So if you're trading in the direction of bias, you should be able to risk 0.5 to 1%. Now, the only reason I'm not risking, and keep in mind for these trades, you want them to be 1:2. The reason I am not risking, and I hope Audrey, you're able to hear us now. The reason I'm not risking 0.5% is because look at the distance, right? So I'm looking at what SARs I'm trading. The SARs that I'm trading are, what is this? Ideally 50 pips away. So ideally, they're ideally my stop loss. So what does this tell you? This tells you that this position can easily get faked out and price comes back down. So this is exactly to what happens during the manipulation hours. So in manipulation hours, so let's say this entry came in at like 3 p.m. or 3 or 4 p.m. Most likely what they would do overnight. So let's consider let's think of this as an hourly time frame. Mostly what they would do is during the night, they can do something like this. And then during London, they do this. So this is why you don't want to enter too far away from the SARs you're trading. So if a trade validates, always ask yourself, okay, what SAR am I trading? What SAR and what SAR zone is this entry based off of? Okay, you identify that SAR zone. So there's this double SAR that's also being retested again by this 15-minute, but the one that this entry that Desire flagged is based off of these two SARs at the top here. So how far are these two SARs from our entry? They're ideally 50 pips. So what this is telling us is that, hey, you can easily get faked out here and then price comes back down. Now, how many, right? If we get faked out of this trade, and keep in mind, for me, I chose to do 0.25%. If price comes up and literally stops us out and then drops back down, what would you, if you're journaling this trade and reviewing it, what would you have said? Or, what's one of the solutions? You could have been like, okay, I could have just waited for a retest because this drop was so far up. So keep in mind, this is sometimes what I call a Judas swing. Because if you expect a candle, let's say you expect a candle to be bearish, sometimes in a good amount of times, the candle will start off bullish, and that's the manipulation, that's the Judas swing, and then drop down as a bearish candle. Now, so how to avoid this? So you can either go in with the whole 0.5% risk, and sure, we saw it last week. Some of these trades will go straight to your TP, but some other times, if you're not willing to take that risk, especially if price is so far down away from your SAR zones, you can either do 0.25%, and if US 30 comes back up here, you can enter your other remaining percentage. So for me, if US 30 comes up here, guess what? I can then enter the other 0.25% with a 50 pip stop loss. Now, let's assume right now US 30 doesn't come back up and then go straight down. So I can either scale in or just leave this trade running. And keep in mind, if we're risking 0.25% on this trade, if this trade goes ahead and hits a TP, you gain 0.5%. So either way you lose, as opposed to, either way you win. Whether you use the best thing with using 0.25% here is that if this trade hits stop loss, you only lose 0.25%. The other best thing is if this trade wins, as opposed to just have had like analysis paralysis and then you didn't enter this trade with any particular point of risk. Since you're using 0.25% risk and you're going for a 1:2, if you win 0.5%. So sure, if you had gone for 0.5% risk and the trade won, you could have gained 1%, but you didn't do that. You chose, like for me, I chose to do 0.25%. So I end up having like a 0.5 gain. If that's the case. So that's the same idea here in the hourly. You see what the hourly is doing right now. So this is the hourly candle we're actually watching for, and I'm glad it started. So in this hourly candle, the best case scenario for me in this hourly candle is the hourly candle to close here. I just needed to close below the SARs, and hopefully it closes next to my SAR sell area. That's the best case scenario. What I don't want to see is this hourly candle closing, like for example here, because if it closes here, I'll ask myself, what is the distance between my entry? So let's say that hourly candle closes here. So the entry candle would be here. I'll ask myself, what is the distance between my entry and the SAR zones I'm trading. So in this instance, if I'm doing a 50 pip, which for me is the max for US30 right now, based off of how I'm trading SARs, this can bring room for manipulation. I can easily get faked out and US30 drops. Look at what happened. You remember yesterday when I sent you guys, so I sent this trade idea yesterday in the chat. So if we go back to trade ideas, look at what I sent for US30. So I sent this. So this was before the move, right? Possible break. No, that was buy. And the trade didn't validate. And keep in mind, I'll go over how to counter trend the daily bias. But right now we are still trading the daily with the daily bias. So this was the trade I sent yesterday. Retest of a break and continuation. Why is it retest of a break and continuation? Because you see here, this double sell SAR zone, I think this was on the 1 hour. This candle broke and closed below. The next candle also continued. But so right here was our entry, or right here would have been the sell entry. But I asked myself, what is the distance between this entry and the SARs I'm trading? So if you can look here, it was around 250. The SARs were around 470. So that's around 210 pips. So there's no way I was going to, as much as the sell, it was valid to enter the sell here, there was no way I was going to enter the sell here while the SARs I'm trading are all the way up here. So this is why I brought my entry up here. And what I would have wanted is on the 5 minute, I wait for price to come back here. And on the 5 minute, I would have then waited for a break and closure. I would have dropped down to the 5 minute, and US30 is dropping down now, right? And look at what happened. This was, and unfortunately, this trade came during manipulation hours. So look at what happened. This is why these zones are so critical. Sellers stepped in and you got that. So, and I remember looking at this trade. So if we go on the 5 minutes, let's go down on the 5 minute. I'll show you guys exactly when that trade validated, and I'll reduce this. Keep in mind, if you've extended your lines and you go to lower time frames, you'll see that those lines just screw up your screen. So let me just reduce this and show you guys. So it was this trade right here. Yeah. So this 5 minutes, so this was that push up for US30. You see that this hourly I showed you guys. So this push up right here was this one, right here. So the entry for this sell, but I didn't take it because it came during those manipulation hours. I would have then came, so in here, you would have, when price got to here, you would have dropped down to the 5 or 15 minute time frame and waited for 2 candle closures to close below a live SAR. So for me, I prefer live. I don't like extending lines on the, especially on the 5 minute. You'll just get a lot of wicks. So if I was trading this trade, but I didn't take it because it came during manipulation hours. This was that entry right there. This was the entry, and you can see the manipulation hours, right? This is why you even wouldn't have wanted to take that. So, but you can see and look at what happened. Manipulated, and US30 now is dropping. But that would have been how you'd have taken this trade. So if it wasn't between 3 p.m. and 11 p.m., this is how you would have taken that entry, if that makes sense. Now, going back to the 30, and let me know if you guys have any questions, but I've gone over, always ask yourself, what is the distance? So whether it's on the 4 hour, so right now, whatever is happening on US30, I don't like this. As much as I'm in a sell right now, my overall sell is going to be here. So let's assume this candle closes here. If this candle closes here, guess what I'll do? I'll wait for US30 to retrace here, and then I'll do exactly what I've shown you guys. I'll go down on the 5 minute time frame for US30, and then I'll wait for the same thing I showed you guys. I'll go down and I'll wait on the 5 minute for this. Now, if you want to extend your lines, feel free. For me, on the 5 minute, I just wait for that live SAR, that current SAR. Now, hopefully that makes sense, right? So whether it's on the hourly, whether it's on the 4 hours, this is the same thing. The question will always be, if your trade validates, how far are the SAR zones I'm trading? So for me, gold and US30, maximum 50 pip stop loss. For FX pairs, you can get away with 20 pip stop loss, but if you want to be safe, 30. And let me put this again here. I think I have the strategy somewhere here. have that strategy right here, right? So the strategy hasn't changed, suitable for scalping and early entries, best if used on the 15-minute time frame and above. Always have a bias from a daily time frame. That will help you avoid looking for both buys and sells. Identify a double SAR on the 4-hour and hourly time frames. This offer the optimal. This is why you guys don't see me trading every day nowadays, right? Like for me, gold, for example, I haven't traded gold in 3 days because on the 4-hour and 1-hour, I haven't had any double SARs. So watch for horizontal parabolic line to form in the direction of your bias. So this, if you guys want to take a screenshot of this, go ahead and do that right now. But I've gone over that. Next, I'll go over how to trade opposite the daily bias. Okay. All right, so I've gone over that, right? So 1 hour, so right here, I've gone over US 30 gold. The reason why I haven't taken gold, you can see on this is on the 4-hour. I haven't had any double SARs, right? 0 on gold. If I go to the 1 hour on gold, I haven't had any double, not to say, people like Desire, they've made money today, like on gold, right? Because there was entries on the 30-minute and whatnot. So same thing with gold here. I am bearish on gold. So for me, how am I going to trade gold? In the next 46 minutes, I need this candle to close below. If this candle closes above this double SARs on gold, that's an invalid entry because you always need 2 candle closures to be safe. According to, right, based off of how I backtested, you need 2 candles to close. It doesn't mean that's the holy grail. For you to find if that works for you or not, you would have to backtest. So for me here on gold, guess what? If gold closed, like for example here, look at how tight of a stop loss it can offer me. It can offer me a 10 pip stop. It can offer me a 20 pip stop. So for me right here on gold, to be safe, maybe a 35 pip stop. And 35 pip stop with like a 70 pip TP. So in gold and FX pairs, they can offer you such a tight stop loss. But you can see for me here on gold, I'll be waiting for the next hourly candle. This is the first time in 4 days that gold is giving me an entry. So you can see I have a sell SAR entry here on the hourly. I have another double sell SAR entry down here at 1887. So for me, I will wait for gold. If gold closes here, guess what I'll do? Same thing. I will wait for gold to retrace here and go down to the 5 or 15-minute time frame and look for an entry there. So keep in mind, the best case scenario, whether you're taking a buy or sell, the best case scenario is your entry candle to be like 10 pips within your SAR zones. The worst case scenario is your entry candle to be like 40 pips away from the SARs you're trading. So if you follow that simple, right, it will be so evident to you. Okay, EU right now, for EU, this is on the 4-hour time frame. There's no double SARs. Well, there's one here. Actually, this one, because this one is 728. So this one is like 4 pips. So it's a 4 pip zone. So that's fine. So this is a double SAR. Now that's on the 4-hour. On the 1 hour, that's when we had some double SARs. So we had a double SAR up here. We had a double SAR right here. We have a double SAR right there. We have another double SAR here on the hourly time frame. Now on EU, so keep in mind, let's see what time this is. This entry came yesterday. So there was this entry. This is a test and rejection. So if you're taking sells, there's 2 entries you can have, same thing as buys. So for sell entries where price is above you, you have a test and rejection because price is going to test the SAR above you and reject, hopefully, back down. For you to take a sell when the SARs are below you, you would have a break and continuation. So same thing for buys, but the inverse. For buys, if you have your SARs that you're trading that are above you, that would be a break and continuation. For buys where the double SARs are below the price, that would be a test and rejection. So for example here, the reason this was a test and rejection, it was because these 2 candles, the first candle, keep in mind, you want the candles to go in there. So you want to see wick rejections in that zone. So right here, let me just replay this to avoid the noise. So in this instance right here, you can see we had double SARs. So the first candle tested the double SARs, closed below them. The next candle attempted to break above them, and rejected below. So here's where you ask yourself the question. My entry candle would be here. Okay. So how far is my entry from the SARs I'm trading? So in this instance, this is like 17 pips. So let's assume you wanted a 20 pip a 20 pip stop, and for you to have a 1:2, a 40 pip, and US30 is dropping heavily, it's dropping back down. Okay, so this would be a setup for you. So do you ask you, so in this instance, our stop loss is above the SARs we're trading. Yeah, sure, this would have been a better entry if this candle hopefully closed above here, because it gives us a little bit of room. But you can see for FX pairs, you know, a 20 pip stop is a small stop, but you can see, since this is the hourly time frame, how good this is, because it's ideally heavily far above that. So this is a trade I could have actually taken. Red flag would have been if this red candle closed somewhere here where my stop loss doesn't cover to be above the SAR, which then would have meant that I would have had to extend. So keep in mind, the higher you extend your stop loss, the more you'd have to extend your TP in order to achieve that 1:2 risk to reward. So in this instance, this was a perfect setup. Now here, if we continue playing the chart, so keep in mind, right, test and rejection. So hopefully you guys have seen that test and rejection entry. And then you go. So for this strategy, if you achieve at least a 1:1 risk to reward, go ahead and set break even. That is the key. If you at least, unless you want to take the risk, if you at least a 1:1, go ahead and set break even. So for this particular trade, I don't know if it achieved 1:1. Not really. So 1:1 would have been if this trade reaches that red line. So let's see if it reached that red line at any time. Yes. So at this instance, if I was taking this trade, I would have set break even. Either that or I secure some profit, right? Because you've already achieved your 1:1. So if you keep going, you'll see for this trade, you got taken out at break even, or let's assume somebody didn't set break even for this trade, and let's see how the trade would have gone on. So if you didn't set break even for this trade, you can see, and I can tell this is during, right, those manipulation hours, because you can see at this time, I can tell volatility started dying down, because this is 15 hours, so that's 3 p.m. So you can see during Asia session, you just have a bunch of ranging. It's testing your zone and rejecting, but came back up. So let's see for this trade. Okay, now you can see for this trade, if you did not set break even at a 1:1, you end up losing your 0.5% if that's what you are trading. Okay, then let's see what happens next. You get a test. You see, because you have a double SAR right here. So for me, I'm always looking at where am I? That's why for me, for the last 4 days, I did not take any sells on gold, because if for me on my chart, I do not have any double SARs that I've marked up on the 4-hour and 1 hour, I'm not looking. So this is areas for me, like I would be setting alerts. It's telling myself, I am not going to trade until I get a confirmation in any of the zones that I have marked up. So here, I would have been, if I got stopped out, and for me, I would have set break even on this trade. So let's say I got stopped out even at break even, the next area, so let's assume, so let's forget about that trade. Okay, now the next trade here, price comes back up. Now, in this instance, if price comes back up, I would have had to take some decisions right here. So you saw here, price closed above the double SARs that we had traded for sales. So here there was the only entry that was here, if you did decide to take it, was this one. Ideally also, it's another test and rejection entry right there. And you do your stop loss above your SAR. So possibly this was a valid trade on the hourly time frame, because this is a red candle, and then the next candle retests that area and closes below. So this was a valid entry as well, and that's one trade you could have taken. So this one you could have gotten away with. So it looks like for you to have your stop loss above the SAR, this is a 10 pip stop. So let's assume you took 200 pips, you would have still gotten stopped out and ideally faked out as well. All right, now in this instance, you get that this is your next area to trade. You don't trade a single SAR unless you've backtested and found entries for it. So in this instance, what I would have been looking for here, I see my first candle, my test candle, okay? So I'm waiting for the rejection candle. So keep in mind, you see how heavy this candle is? Like this, I wouldn't have wanted this candle to close here. I want this candle to close somewhere where my stop loss is allows me to be above that zone. So this candle test and rejection right there gives me like a 200 pip stop, 40 pip TP. You can do a 200. So do 200 to 300. So either 200 pip stop, 25, I'm sorry, 20 pip stop, 25 pip stop, or 20, 25, or 30 pip stop, and then adjust your TP accordingly. So that would have been an entry. But you can see here, if, again, same thing, this was a heavy move. This was a heavy move down. So in this instance, I had a decision to make. Do I jump in with the whole 0. And US30 is dropping? So set break even for this trade, because it has already achieved a 1:1. So keep in mind, in this trade with a 0.25% risk. So same thing we went over right now. Set break even because this trade has achieved a 1:1 risk to reward. Our stop loss was 50 pips. We've already achieved 50 pips for this trade. So I am setting break even for this trade. So you can decide whether you want to set break even or secure some, or do both. So personally, I'm at break even for that US30 sell. So if this trade hits for me, I gain, it's a 0.5% risk gain for me. Desire, I don't know. So the other reason for me why I entered with a 0.25% risk is because normally my entries are on the hourly time frame. So for this one, Desire brought it up, and this was during, because Desire trades like 15-minute time frames and also 30-minute time frames. So I'm looking to extend this. So that's another reason why I entered with a smaller risk. So I'm not just going to, as much as Desire's entry or what he flagged was valid, I'm not going to enter with full whatever, because I haven't backtested the 30, I haven't backtested the 15-minute. But anyway, I trust him because he's been doing a good job with the SARs. But anyway, I'm at break even for that trade. I will actually secure, I will secure, no, you know what? Yeah, I'll just be at break even. Move stop loss to BE. Okay, so I'm at break even for that trade because we are almost hitting full TP. Now, going back here to the EU trade. So here, I had a decision to make. The first decision here, the trade is ideally, well, my stop loss is barely above the SAR zone if I was to go with a 20 pip stop. So here, same thing we just did with this US30 trade. Could have decided to enter this trade either with a full risk, because we're trading the direction of bias. I could have decided to enter this trade with a 0.5% risk, or because of the distance, I enter with a 0.25% risk, half the risk that I would normally enter. And then if the trade retraces up, I enter using the later, the remaining 0.25 for, in future. But if the trade doesn't retrace, which in this case it did not, I end up securing. So in this instance, right, if it's 1:2, I'm pretty sure this one achieved 1:2. I set my break even, and then I get my full TP. So yes, I did not I didn't get like a 1% gain if I had risked 0.5%. But since I wanted to be in the game, so you can think of this sort of as a filler trade. So because I wanted to be in the game and the trade was valid, I entered with a 0.25% risk, and I end up securing 0.5% instead of just staying out and hoping like what we did last week. Last week in like 2 trades, we waited, and the trade for 2 good, 1 sell for US30 and 1 sell for gold. We waited, but we didn't get that retracement. So instead of just ending up with nothing and the trade was valid, you just lower your risk and say, okay, if this goes in my favor, I'll have a 0.5% gain. That's fine. So hopefully that makes sense. So whether it's on, right, the same idea, whether it's on the 1 hour or the 4 hour, I need 2 candles. You see like what's happening on gold right here? This is perfect because I need this hourly candle to close. And then when that hourly candle closes, I have a decision to make. What percentage risk will I enter there? Now that covers trading in the direction of bias. Does anybody have any questions? Next, I will go how to trade against the daily bias. So let me know if you guys have any questions regarding what we've just covered now. Okay, perfect. Now, let's assume like yesterday, right? So if I turn on the green lines again, so here's what turning on those green lines does. So let's see what it does on the 4 hour, 1 hour, and all of that. So I'll turn on the green lines. So both green and red right here. Now, so for gold, let me focus on gold for now. So you guys have heard that the last 4 days, gold hasn't given me an entry on the 4 hour and the 1 hour. So let me focus something on gold. Here's another thing, right? If you have both green and red lines, it can be a little confusing. So let me turn off the red lines for now, because I've already gone over. We've seen that in the last 4 days, gold, yes, was bearish, but it did not have any entry on the 4 hour and 1 hour. It did have entries on the 30-minute, on the 15-minute, as Desire has shown, but on the 4 hour and 1 hour, it did not. So I'll turn off the red lines because we know there were no double SARs. Now, in the hourly time frame, gold had, let's start on the 4 hour first. So on the 4 hour time frame, if I wanted to take a trade in the opposite bias, so come here on the 4 hour, I see, where are the buys on gold? Do we have any double SARs close? No. The next one is all the way at 1922. So there's no double SAR on the 4 hour until that time. I come down on the hourly time frame. On the hourly time frame, I would have came, so here, when this, because I can tell this SAR to the top had been formed by this candle. Now, I would then box in this zone, because this is a double SAR. Now, since this zone is above, what entry will it give us for gold? It will give us not a test and rejection, because this entry, since we are buying, or we would be in any, right, assuming somebody would have wanted to buy here, you would have looked for a break and continuation. So ideally, you'd have looked for 2 candle closures above this hourly zone. So this whole time, where do you get those 2 candle closures? So here, you get 1 candle closing above. The next candle, instead of closing above, guess what it does? And this was yesterday, closes heavily back down. Okay, that's fine. Then we form another double SAR region right here. Okay, now for this double SAR, so this one, of course, will be the first one to get tested. So for this one, you would wait for 2 candle closures above. So you got those 2, and let me replay this here. Since it's probably easier that way, right? So in this instance, you have these 2 candles right here. So let's continue with the chart. So we would want 2 candles to close above here. And for that one, okay, now this would be the entry on gold if I was buying. But so let me just line up what I would, so this would have been my entry, and my stop loss, I want my stop loss to be below that SAR, below the double SARs, or below the in this case, the low of the previous candle. So, but let's assume it's there. Let's see how tight of a stop loss. It would have given us like a 12 pip stop. But let's assume I just want to have a standard 30 pip stop on gold. And for me to have like a 60 pip TP on gold for this trade. Okay. Now, here, this is what I would have done. My bias for gold yesterday was still bearish. So instead of getting into this trade with a 0.5% risk, I would have risked 0.25%. The reason for that is because I am trading against the daily bias. So I know that the river is flowing down, but I'm trying to swim up. So if I get burnt, I don't want to get burnt the same way I could get burnt using a valid trade, because if you start using the same risk with all of your trades, this would mean that you're using the same, right? Because nobody has 100% win rate. But if you use the same risk with all of your trades, it means you're using the same risk with your A plus setups as with your F setups. So you always want your A plus setups to have a higher risk, because well, not higher risk per se, right? Don't think of over leveraging, but to have a better risk to reward. So if let's say I have like okay, let's even assume you're in the casino, or let's assume you have a probability of like 90% probability of winning the lottery, right? Oh, actually, let's just assume this way. Let's say you could see what US 30 is going to do in the next 2 days with like a 90% certainty. Okay, if that's the case, personally, you know what I would do? Like if I knew what the daily candle of tomorrow would be, I would go maybe get a loan from a bank, like what, 50K or 100K, and go all in, right? Because I know for certain, like if I've seen the future, I know US 30 is going to go this way, right? It's a probabilities game. But why haven't I done this right now, right? So it's because I don't know what US 30 will do tomorrow. So would I go to the bank and get a 100K loan to go all in on US 30? Probably not, because in one instance, you have seen the future. In the other instance, you haven't. So think of it that way. So in this instance, ideally, we can't see the future, but we can see the general trend. We can see the general bias. So in this instance, I know that in the daily, gold is trending down. The bias is down. So I would be so mad at myself if I'd taken this trade with a 0.5% and lost, because I would have been like, why was I trading against the general direction? But if I really, really, really wanted to trade and I'm like, I have to trade today, I would have said, okay, you can trade, but still follow the rules. You're going against the bias, that's fine, but follow your entry rules. So you found an entry here on gold. So in this instance, do right 30 pips TP, 30 pips stop, 20 60 pip TP or whatnot. Wait for those two closures, and US 30 is about to hit full TP on that trade. We are almost there. Thanks, Desire, man. Man, I haven't traded in a minute. Okay, so this is the trade. So let's keep. So I would have entered this trade with a 0.25% risk, and let's see how that went. So right, still going. Right, would have gone full TP even if you set break even. This is fine. Now for this trade, it would have been like I would have gained 0.5%. Now that's fine. That's fine for trading against the bias. So you can see that as much as the daily can be, if a daily bias is bullish, you can have pullbacks, right? Because if a daily is bullish, it doesn't mean that every 1 minute candle for the next 10 days will go up. You always have those retracements, right? You will always have those retracements. The question is, during those retracements, are you going to risk the same amount as you would have risked with your A+ setups trading in the direction of bias? Now, another entry, so that's one, right, would have gone to full TP. Another entry would be these two double SARs right here. So here we would have waited, right, for the same thing, either break and closure or test and rejection based off of where price was. So here, I think we would get like break and closure. So here, the only entry here for gold would be this break right here, and break closure, and then continuation. So your other entry on gold, if you're trading those double SARs, would have been this. But for you to win this trade, look at the amount of stop you would have needed. You'd have needed a 50 pip stop, and ideally 100 pip TP, if I'm not wrong. Yes, and I'm almost sure for this trade. Let's see how far it went. So this trade you could have gotten out at break even, I think. Yeah, this trade could have been out at break even, because if you're 1:1, 50 pips, yeah. So this trade could have just gone out at break even right there, and you could have gotten stopped out at break even, and that is trading against the bias. So it shows you can either decide what do you want to do. So this is why for me nowadays, I only and the other thing for this, I don't want both green and red lines on my chart, right? So if you want that, feel free. If you don't, so for me, I just leave. If I'm looking for sales, I just only have the red lines in effect, and that's it. And keep in mind, we have multiple instruments. So if gold doesn't give me an entry, guess what? EU has been giving entries. US 30 has been giving entries. So you'll have a lot of entries, as much as the instrument maybe you trade does not give you an entry. Now, right? So hopefully you guys got that. You can trade against the daily bias, but my recommendation is follow the same entry rules, and instead of risking the same amount you would risk while trading in the direction of daily bias, risk half of that, so that if you get stopped out, you don't start blaming yourself and saying, God, I know Michael always says don't trade against the daily bias. If only I'd listen. So it's taking a 0.25% loss is better than taking a 0.5% loss, right? So like on 100K, 0.25% loss is 250, and 0.5% loss is $500. So I think if you lost $250, that would be a better thing than losing $500. So just look for think of that. And this is the same thing for all other time frames. So look for what works for you. So for me, my entries are in the 4 hour and 1 hour. Desire has been back testing and he's been doing amazing with the 30-minute time frame. So for example, the sell we just took here. So good job, Desire. You've gotten us a nice 0.5% for the day. So that's good. Okay, does anybody have any questions regarding trading with the daily bias, trading against the daily bias?
Okay, bro, when you said the hourly right now, you just showed the hourly. So with the hourly, when you're on the green lines, like right now, when you're on the green lines with the yesterday, when you could have entered, of course, that's going against the daily bias, like you said, but yeah, when you see the green lines here, so if you had on the red lines as well, with the green lines, how would you have done that? Because the daily bias is still bearish. So in that case, so how would you do it?
So one thing I've noticed, if I leave both the green and red, I will miss entries. So I noticed that when I was leaving both the green and the red, the only time I don't get confused is if I don't extend the line. So for example, the daily, because it becomes so clear to me what direction and what SAR has been broken. But if I left both the green and the red on especially, so keep in mind, these are the most important. The daily is easy. These ones are the ones that tell you get in, right? So I don't want any delays for the lines that are telling me to get in or to get out. So what I found was it confused me. Number one, yes, I could have highlighted this as a sell zone, but I start seeing these green zones, right? So I could have started like right here. I could have been looking for sales, but then I see all these green SARs, and you're right? They're double SARs. So it affects my psychology. I'm like, oh my God, maybe it's going to go away. Maybe I'm going to enter this trade and get faked out, which is another reason why I tell you guys, do not tie the SAR with the markups. Do not tie the SAR with anything. So in this instance, I would much rather just have the red lines only, such that I'm like, if it validates, I'm going to enter. I'm not going to look at anything else. That's it, right?
Yeah, basically, you wouldn't care about the buy, really. But the thing is this, though, when you said the buy, if you really wanted to trade, but the problem is, the daily is bearish, and then on the hourly, and if you had got the green SAR and you got the few candle closures above, it's confusing. So you wouldn't take that trade, innit?
Yeah, like for me, I wouldn't. Like first of all, I wouldn't even have taken it because I turned off the green line. So I gave you guys the ability to turn this off in the indicators. So if you turn, and I told you guys, I was honest with you guys, and I showed you guys, I made a lot of losses. Well, the first 2 days that I deployed this strategy, because I was trading everything. I was trading buys, I was trading sells. I made a lot of losses. But since I've included such things, like if the daily bias is bearish, why am I looking to buy? Like, that's the first question. So for me, like personally, I am not looking for buys, but I just showed you guys, if you really, really want to buy, turn off the red lines, then look for the green lines, and you will find an entry somehow. You will find that entry. So the question is always, do you want to trade with the daily bias? Do you want to trade against it? Also, there are other ways of looking for daily biases. You don't have to use the SAR. There are other strategies out there to help you find a daily bias. But for me, if I'm using the SAR daily bias, if I'm using the SAR indicator to show me the daily bias, why would I be trading? Why would I still use the SAR to find me an entry against the daily bias, right? Like this. Yeah, because like the other day, I remember also, one of the first days, and we took like 2 losses with this strategy, is because, like, for example, all of these entries have been bearish for like 2 weeks, right? Which supersedes when I deployed this strategy. So I remember the other time we took 2 losses, the daily bias was telling us to sell. But here, on the 1 hour with my trend lines, and I still draw them. My trend lines were telling me to buy. And guess what happened when we bought? You know, gold US 30, they immediately hit stop loss. So it's like, okay, why would I just be gambling? And I can, like, literally, if you look at this, for me, this looks so amazing because it's like, look at how far US 30 has been dropping since it gave you that daily bias. So why would you be trading again? Yes, you can, because, right, you can see these pullbacks. You can see these pullbacks here. But why would you be trade? Same thing with gold. Gold has been selling since Thursday, July 27th. What, for like a month now? Why would you be trying to buy gold? Sure, gold has given you entries that you could have taken, but right, it's all a game of probabilities.
That, yeah, right.
Yeah. So, right, not that you can't, right? Because keep in mind, so here's the other thing. So for example, you guys see like this one right here. You see when gold gave us this entry right here,
Yeah.
it gave us a sell entry, but it came back up. So here, right, if we go back, or let me try that in real time, like right now. So we are bearish on gold. So this is to mean that, no, I don't want to use this since it's given us a green SAR. Okay, US 30, for example. So we are bearish on US 30. US 30 hasn't even given us an indication of a green SAR like gold did today. So this, we can easily have sell zones here for US 30. So I'll show you guys if we go down on the 4 hour and 1 hour. So US 30 can still be bullish right now. So let me show you guys like an instance. So we are bearish on US 30, sure. Now, if we go on the 4 hour and 1 hour, where's the 4? So 4 hour. So this is 1 hour on US 30. Let us look down below. There's nothing. So 4 hour, there's nothing as well. Okay. So here, this is a double SAR on the 4 hour. So this is an area you can possibly look to buy if you wanted to, right? Because keep in mind, as much as we're in a downtrend, US 30 can come all the way here and bounce off of here, go up. Okay, so for example, go up, come back here and pick up the sell side liquidity and go back here to this double SAR and go back like, so if we look up, look at these double SARs right here. So you can see how even though a daily bias is bearish, price action. So you see how Steven always thinks, or, you know, says like price moves from one area to another. So US 30 can come here, pick up buy side liquidity and go up, but then still not give us a daily closure above a green SAR, or even give us a daily buy SAR at all. But then would you then say that US 30 is bullish if it comes here? I mean, sure, maybe in the short term or whatnot, but even the daily, we don't get that confirmation for what is it called? For a buy. You know, technically even here I can draw a trend line, right? US 30 has been trending down. So even if US 30 comes here, right, it could still be a downtrend, especially if it does this. So just because something goes up does not mean that it's changing bias, right? So always ask yourself, what is going to be my radar to tell me to look for buys, to tell me to look for sells? For me, it's the SAR on the daily. So, right, it can be something else for you, but always have something to tell you today all you're looking for is buys. Today all you're looking for is sells. And then something to tell you, okay, if you're not looking for, if you're only looking for buys today and you don't see any buys and you get any sell entries, use this to enter those opposite. And then just know that since you're going against your own rules, technically, is that just lower your risk. And once you do that, it will be so easy. So did that make sense?
Yeah. So you know this move that happened today. You know the it went to 1904. This, I know this is out of the trading hours that we should trade, but this what was this like with the move? What was it? What do you think? Like what? Like why did it move that way? Is it what is it?
One thing we can check, so just by looking at SARs, what we would want to see is a double or an SAR, green SAR down here. So we don't see that, right? So here we have two equal lows. On the SARs, we don't have anything that's telling us what happened, right? Like any buy or any sell, right? Okay, then we go down. So we have other things here. So for example, we have the markups indicator. So in the markups indicator, let me turn off this. In the markups indicator, what do we have here? Okay, we have this zone that's close to us. So we have an hourly bullish high right there. If we turn on the zones, we have buyers. So we have buyers sitting down here, and then we have the hourly bullish high right there. So it could have been an order block, right?
Yeah.
So it could have been an order block here also. If we went on, let me do this, and no, let me do a clean chart. So let me do gold here. So, right, order block could be one of them. Here, if we look at structure, what we would want to see is some sort of support at this level. So if I just drew this, no, that's the wrong one. If I just drew this and extended this line left, right, I would have wanted to, how you can extend this raise? I think it's the other one. I think it's somewhere below here. Let me see if that lines up with that. Yep. So see this?
Yeah.
So here, this was an area of rejection to the top. This also right here, this right here too was an area of rejection to the bottom. So this is a critical support and resistance area. So the further you keep, and of course I'm going to deviate by a couple of pips, but you can see this zone right here, how there's been rejections on gold. So it can be an order block. It could have been, so always remember, right, what causes price to move from one area to another? So you have three things: fundamentals, you have sentiment, and then you have technicals, right? So technical is like support and resistance. Fundamentals, I don't know what happened today on gold, right? So you can look at the news. So would any of these news events today have affected gold price? Okay. Then you have technicals, like what I've just showed you. It could have been support and resistance. Then you have sentiment, right? How is the market doing? Are people feeling that the economy is not good, right? So always ask yourself, if something is moving, if you want to know what has caused it to move, use those three things. Fundamentals, has anything changed? Has any news event happened today? Okay, if not, look at your technicals. Are there any support and resistance lines? Are there any support and resistance areas? Are there any order blocks? You would probably find an answer for the first two. The third one, you'd have to research how to get a handle of that, because the third one is sentiment, is like, how are people feeling about the market, right? So for example, we normally have some news in Forex Factory that's called like consumer sentiment. So it's telling you how consumers are feeling about the market, right? So that's an example of how to find sentiment. PPI is also, is it PPI? There's some that says it's a survey of manufacturers or something. I'm not sure if it's PP. No, it's not.
Both, isn't it? It's both fundamental and sentiment together, isn't it?
Yeah, it can be both. Yeah, you're correct. Yeah. So always ask yourself those three things, and then, right, try and find the news events that are related. So you can always be like, right, why is gold dropping today, right? You can do some of those things, and maybe you'll see like a headline, like something like Australia output of gold, because Australia, I think, is one of the countries that's big in gold production. So you can see a headline like, oh, Australia finds 10,000 or whatever metric tons of unmined gold, right? That is going to cause a shift in the gold price. So always ask yourself such things. So those three questions: is it fundamentals? Is it technicals? Is it whatnot? All right. So what else do we have? So that is Desire. Hopefully you probably secured a good amount of profit on that. So yeah, so that was a good trade there. So for me, yeah, I didn't use the full 0.5% ideally, because I don't trade the 30-minute, but just by back testing and visually looking at it, the trade did make sense. And also I went also with a 0.25% because of the distance before or away from the SARs that I was trading. And also, so you guys can see, right, Desire is using Pepperstone. So for example, same thing here. For me, since I use Oanda, you'll see that the entry wasn't there on Oanda, right? So also depending on the broker that you're using, you might not get that entry. So for example, for me, if I was using Oanda, you can see that entry isn't there. So keep in mind, the reason is, so for example, let's see the high of this candle is 34,591, right? On 592 on Oanda. But if we go on Pepperstone, was that 592, I think? Yeah, I said. So if we go on Pepperstone right here, probably the high of that candle will be different. Look at that. 34, 606, 605. So it's like a 10 pip difference. So that 10 pip difference, so keep in mind every indicator, so not even just our own indicators, all other indicators out there, if you put them on different brokers, the results will be different because different brokers have different takes in prices. So you can see here for Pepperstone, the high, this high on US 30 is at 34,605 area. On Oanda, it was 34,592. So that little 10 pip difference will change the algorithm of the indicators. So just keep an eye out on that. So for me, if I was trading that and I was trading on the 30-minute on Oanda, which is what I use for mine, right? I would still be out of the trade. I wouldn't be in the trade. My double SARs would be this ones right here. And for me, right, my entries would be somewhere here. What's up?
Something that I noticed is that sometimes when I was using Oanda, is that when I take a trade on MT4, and after I put the configuration on TradingView just to have my TP and to look on the trade, it was so different. Like there was like 15 or 20 pip difference between MT4 and Oanda, and I didn't like. Sometimes that's why, like last week on the live session, we took a trade together on 5 minutes time frame, and I had an alert on my Oanda screen telling me that the trade already is in break even. So when I came to my MT4 screen, I put the trade on break even, but it wasn't break even yet. You know what I mean? Yeah. On Oanda, it was showing me that the trade is on break even, but on my MT4, it wasn't break even yet. So it messed with it did that like 3-4 times last week. So it messed with my trades. I put them break even too soon.
Yeah. Yeah, so that makes the other so I'm checking something right here. So the other question is, so since MT4, right? Because you think of MT4, I'm guessing you're using probably, is it FTMO?
Yeah, FTMO.
Yeah, so you probably want to check, and I'm guessing for you, Pepperstone now is working, right? So for example, right here, if I'm looking at Oanda, if I'm looking at 362 right now, if I'm looking at my MT4, and I'm on FTMO as well, price should be showing around 362 as well. For me right now, Oanda, this is 360, MT4 is 365, 366 area. So yeah, you might want to find a broker that or a provider that lines up with your prop firm price. So let's see. Yeah, but yeah, different because even FTMO, MFF, right? They have whatever brokers they use, so you might want to check that as well.
Yeah, even Pepperstone, it's not exactly the same prices, but it's better than for me. It's better than Oanda.
Yeah.
For now.
Yeah. Okay. Yeah. So for example, right now, right, even before we took those trades, if I was so again, I don't trade on the 30, but if I was trading on the 30-minute time frame, my entry would be somewhere here. I would literally be waiting for the entry now. So for me, what I've noticed, right, is just so most of the times, if you don't get as Desire said, right, there's a time we took, and I think it was you two also who one time you mentioned that you'd send me a trade, you told me you didn't see it on your chart. So sometimes you would get a trade, yeah, even on the 4 hour or 1 hour. So sometimes like for example, you guys, depending on the chart you're seeing, let me turn off these green zones because I'm not looking for buys. But like since I'm looking for a sell here, some of you might not be seeing these double SARs on your chart, which might be because you're not using Oanda. So for example, right here, if I change gold to Pepperstone, I don't know if Pepperstone have a chart for gold. Probably not. Let me choose capital.com. So capital.com still has it. Let's see. TVC. TVC has it all the way down here. So you can see that variation. But either way, right, even if you back test it, so for example, if we back tested this, the entries should still line up. So you can see here, this whole triple SAR would still have given you sell entries. So, right, you might get some margin of error, but for me, I just use Oanda. Yeah. Any other questions? So this is the hourly. So for US 30 right here, this should be on the hourly. US 30, I am waiting for that. So you can see this is what I don't want for US 30, because if this hourly candle closes and it's in the next 1 minute, right, it will be a valid trade, but look at the distance, right? So for me to enter this break and continuation, my stop loss would have to be this way. That's a 150 pip TP, right? So do I want to do that? No. So since I want a 50 pip TP, guess what I'll do? I'll wait for US 30 to retrace up and drop down to the 5-minute and 15-minute and look to take this sell on US 30. All right. Any other questions?
Yeah. So, bro, one more thing is, when you like ideally, what time do you like exit trades? So you wouldn't hold trades between, like, when would you look to exit?
Either
Like on
well,
a daily basis.
either I hit stop loss or I get taken out at break even or I hit TP, right?
Also, yeah. So the time. So the only time the time matters is when you're entering, right?
Yes, when you're
That's the only.
entering.
Oh, so that's how you see it, right?
Yes, you can
Oh,
choose. Even the times when I've carried a trade into Asia, I've either been already at break even. I don't think I've carried a trade to Asia and then it reversed on me and hit stop loss. Like recently for the SAR, for the previous strategies, yes. But for this SAR, I think since we haven't traded with it a lot, I don't think I've carried a trade into Asia for SAR. I don't remember, probably not. I don't remember me carrying a trade into Asia. Yeah, but the only way I exit a trade, right, is if TP, stop loss, break even.
okay, that makes sense. Yeah.
Yeah. Right. Anything else? All right. Thanks, Desire, for giving us that win, man. At least we got something for the accounts today. I hope I took that. Yeah. Um, I'll post this in the group. All right. Let me know if you guys have any questions, but if not, I will talk to you guys tomorrow. So this was a break and continuation. Sell 30 break. Yes, that was it. Perfect. Desire, what percentage did you risk for that trade? Or did he already leave? I think he left. Oh yeah, he left. All right, guys. I will see you guys tomorrow. All right, bye, guys.